morning, afternoon, or evening, depending on where you are in the world watching this right now. And welcome back to another episode on my investment portfolio channel. And guys, I'm pissed. I'm very pissed. I haven't been keeping up to date with I haven't been keeping up to date with the new features Trading212 have been planning to bring out. But I was watching a couple of other channels this week, Trading212 channels, and I saw that there was this new pie chart auto invest feature thingy where you can split your portfolio into pie sections and rebalance how much you want to spend on each stock and stuff like that. Apparently some guys have it. I'm not 100% sure how they got it, but I saw that there was some beta scheme and people that participated in it were randomly chosen as people to receive the feature. Why the was I not more vigilant in keeping up to date with the Trading2 updates, for sake? It looks pretty nice as well, and I think that they're the only, Trading212 is probably the only zero commissioning trading app, or maybe even the only trading app in the UK that has something like this implemented within their app. Goodness sake, man, I'm just getting worked up even thinking about it, because it would have been so much easier to use that pie feature compared to the way I balance my portfolio now. So I just have to do it through Google Sheets and I have to change all these stupid calculations and stuff. But yeah, hopefully I get the update soon, because that would make my life so much easier with the way I like to balance my portfolio. But anyway, back to my portfolio, and I'll get on to why I have Kim Kardashian as my thumbnail. And if this video becomes my most viewed video, then I understand. It's my fault. I put her up there on purpose. I get it. If more people click this video than my other 3 videos that I have uploaded to my channel, then I get it. I understand. But yeah, we'll see how that works out. But yeah, this week was a bit of a topsy-turvy week. I actually did my own share of investing this week. I've decided to change my approach of my investment cycle, of where I pound cost average from a weekly basis, changing that to a bi-weekly basis, because I was reading some articles and looking at some calculators and calculations, and it seemed as if bi-weekly outperformed weekly and monthly payment cycles. So I'll just try this out for the rest of the year and see how that plays out, and I think it will also help control the average price of my stocks, keeping them more sane and less erratic. So last episode I showed off the stocks that I had on my watch list that I was looking into and would possibly buy. So basically I bought shares in pretty much all of the ones that I had that I could fractionally anyway, with the exception of Beyond Meat, Shopify, Diageo, and I think 3M. So now I have now I have 46 investments in my portfolio. So let me just go through the new additions to my portfolio. So starting at the top, we have Adobe Systems, we have Highland Gold Mining, Moderna, Money Supermarket, NKLA, yes, Nicky Corporation. Listen, I invested a little amount into this company. Okay, look, I don't even have half a share yet. £6. What's £6 gonna do? If I lose £6, I don't care. I could probably spend 2 days around London picking up £5 notes on the floor. £6 is nothing. Just make sure that when you're investing in risky stocks, just make sure you invest in what you can afford to lose. Simple as. So yeah, NKLA, Nvidia, Pfizer, Realty Income, Spotify, Square, and Trade Desk. I think that's the last one. And yes, I understand that the market is expensive right now, especially according to the metrics. But as I've said previously, I don't care. I just don't care. If the price of the stock goes up, I'm buying. If the price of the stock goes down, I'm buying. Plain and simple. You can only do this if you believe in the companies that you've invested in. And you're probably thinking, oh, this guy's a fool. How are you supposed to manage a portfolio of all these stocks? Okay, I'm going to be truthful to you. I'm not going to spend each week checking upon every single stock that I have in my portfolio. I don't even do that anyway. But I feel like I've done enough research to be able to be comfortable enough in my choices and hold the stocks that I've invested in until I start seeing red flags appearing for the company by the means of maybe worsening of their fundamentals that I bought them for the first place. But at the moment, I'm pretty much happy with what I have. I am looking to sell some of the stocks that I initially invested in, like British Land, which I just invested in because I saw some other YouTubers doing. I thought, okay, let me just invest in that. So I just blindly invested into British Land, but I don't favor with this company anymore. So if this turns green this week, then yeah, I'm looking to get out of it. But yeah, I'm pretty much happy with what I have now and the amount of money that I've allocated to each of them. Okay, so moving to my top winners this week, we have Square and we have Spotify. So let's start off with Spotify, so I can explain to you why I have Kim Kardashian West in my thumbnail. But first of all, it's like I'm longing this Kim Kardashian explanation out, but if you've been paying attention to the news around Spotify, then you already know why she's in the thumbnail. But yeah, first of all, the reason why I invested in Spotify is because I like it. However, for me, that's not a good enough reason to invest in a company. I mean, I also love Netflix. I probably use Netflix every day or every week, but the reason why I don't invest in Netflix is because they have a lot of debt and their cash flow is negative. So those are the kind of main turn-offs for me when it comes to Netflix. But when I'm looking at a stock, I also have to consider other factors, like I mentioned with Netflix, their financials, their growth prospects, basically just their fundamentals. And never forget that. Always look at the fundamentals of a company before you invest in them. And with Spotify, they're in pretty much good shape. They're debt-free. They have a negative. Why is their car beeping outside, man? Relax. But yeah, Spotify have a negative EPS at the moment, but it is scheduled to snake its way over to the positive side in the next couple of years. So that's a good sign. And above all of this, I just love listening to music, and I'm sure many people do too. And I think what Spotify are doing with branching out to podcast and storytelling and whatnot, I think that just makes the stock all that more attractive, which finally brings me to Kim K. Can I call her Kim K? Am I close enough to her to be able to call her Kim? So yeah, it said that Kim Kardashian is set to sign, I don't know if she's signed already, but she wants to sign a deal with Spotify to bring over a podcast where she would essentially be talking about reforming the justice system, the work she's been doing to help get people out of prison, brought about by wrongful convictions, etc. So that'll be an interesting thing to listen to. I'm not sure I'll be lending her my ears, but maybe, who knows. And then in addition to this, there's also news that DC and Warner Bros will be coming to Spotify. Warner Bros, that just sounds weird. Warner Brothers will be coming to Spotify in the format of narrative or narrative podcast, however you want to pronounce it. And I think this will really help push out the audiobook platform that Spotify already have, and maybe hopefully inspire more creators to dip their toes in that area. But yeah, I think that's what caused the Spotify stock to shoot up nearly 30% this week. I think actually at one point it did reach 30%, as you can see here, but by Friday's close it dropped down a bit. And why I think that these additions to Spotify are good, especially for the company itself, is because it kind of provides Spotify with a leverage. They could be like, okay guys, we're providing you with all this A-star quality content, with all these high-end celebrities exclusively on Spotify. Why don't we prop up our prices a little bit? I mean, it's similar to what Netflix have done in the last couple of years. They've increased their subscription amount. So if they can do it, why can't Spotify? I mean, they're giving us all these high-end features exclusively to Spotify. So they're in their right of mind to increase premium subscription prices, or however they want to do it. And not only will the increase in prices help Spotify increase their revenue, but it could also help pay off what I can only imagine the significant cost of getting these people exclusively on Spotify. But yeah, as you saw, the stock price has shot up very quickly this week, so I guess I was fairly lucky to get on it on Monday. But in my opinion, a correction is in place because the price has gone up so quickly in such a short space of time, and I don't think that these additions to the app justify for this quick increase in just a week. So yeah, I think a correction is in place to bring this stock price down a bit. But of course, as it comes down, I'll be investing in it even more so. That's good. Alright, so the next stock that we're going to look at this week, which is another top winner, is Square. So this was another new addition to my portfolio this week, and they are up 13%. And I think that was helped with the news that we got around the increase in retail sales for the month of May, which points to the idea that the recovery of sales is happening at a faster rate than we first imagined. And obviously with the Fed pumping in money into the economy, stimulus checks, unemployment benefits, etc., consumers are more equipped with spending power, which will help with the increase in retail sales. Plus, Square also announced an acquisition of a Spanish company called Verse, resulting in their first venture outside America and into Europe. I think they're just in the initial stages of this, so they'll help Verse to try and run things as best as they can before they start implementing the strategies that they've used in America to become a powerhouse. So it'll be interesting to see how all of this plays out, and I think Square's an interesting growth stock to hold on to. Alright, so let's move on to our top losers this week. And first of all, we have Southwest Airlines. So on Wednesday, Southwest Airlines declared that they had enough cash to last the next 2 years, which is an increase from their previous prediction of 20 months. So they're saying they have 4 more months of extra cash than they previously did. And this is why I invested in Southwest Airlines. This is why I chose Southwest Airlines over the other airlines. They just have more liquidity and better financial management compared to the other airline stocks that I looked at. And based on all of this, I think if there was one airline that was going to be left standing after all of this commotion, I would have chosen Southwest Airlines. Now, I am naive to the airline stock market, so I might just be speaking out my ass, but Southwest Airlines just looks like a well-managed company. And although it's in my risky part of my portfolio, I'm only investing small amounts into it because it is a cyclical stock, but it's a company that I think are probably the best managed airline stock in terms of financials. So yeah, hopefully they can come out of this strong and hopefully recover from their issues. I'm getting gas, but these guys did make up my biggest losers of this week. So let me just chill for a bit. They also came out to say that they've seen modest improvements in bookings in the month of June, which signifies that we are surely but slowly starting to see the fear of flying again being eradicated. I think why the stock actually fell this week isn't in relation to their fundamentals, but the obvious environment that we are in right now. And I think the general transportation portion of the market just didn't do well this week, so Southwest Airlines kind of followed the trend in that. But yeah, it's a stock that I'll continue to invest in as part of my risky allocation of my portfolio. Alright, so the last stock that I want to talk about is Barratt Developments. So where am I going? Barratt Developments. So on Tuesday, Barratt Developments reached a price of around £5.28, a 5% increase from the close on Monday. And this was fueled by the acquisition of a company called Oregon. It's a timber frame company, one of the largest timber frame manufacturers in the UK. And as Barratt already makes use of timber frame processes in Scotland, this will help to expand this building process to England and Wales. So by buying this company, Oregon or Origin, however it's pronounced, they're kind of cutting out the middleman when it comes to acquiring more resources, because now they already have it, right? So hopefully this helps to reduce raw material costs and also increase profit margins, which the benefits of could trickle down to the investors in the way of more dividends. Who knows? But that'll be interesting to see, and hopefully that does happen. I want to get a little bit extra cash for holding Barratt Developments. But yeah, this stock is one of my top losers, falling about 3% this week. I don't really know why after that good news. Maybe this is just a healthy correction, but yeah, we'll see where this opens next week. And on that note, I'm going to end the video there. Hopefully you've enjoyed my portfolio update. If you didn't, tell me why in the comments, and hopefully I can improve for next time. But yeah, thanks for watching, and I'll catch you in a bit.